Good morning, ladies and gentlemen, and welcome to the show. Today is the 8th, the Wednesday of 2020, January 8th. Listen, thank you guys for tuning in. Let's get the chart started right here. What Iran said, I guess in their statement, is that this strike that they just made was a slap to the face of America. That's what they said. Now, I'll tell you what. It says here, Iran's supreme leader says missile strike a slap on the face for the United States. Okay, now I go to this article here. Where is it? Okay, this article here, it says, quite dramatic, but officials confirmed no U.S. casualties from the Iranian missile strike. Now, I'll tell you what. Does anybody out there think it's an accident that there's no casualties? I don't know. I mean, this is just what I'm putting together here, that this strike has no casualties. But yet it was like 22 of these big, giant missiles, whatever, No casualties. No casualties. And then Iran says it's a slap to the face. Okay, that's interesting. Okay, but let's move on. Let's take a look today at the silver price and stuff. $18.29 for silver. We saw a dramatic rise in silver as tensions were escalating there. It seems like tensions have cooled off slightly now, And silver prices come back down a little bit, but it's still up from where it was, a month or two ago. We're seeing a rise in the price of gold and silver. And I don't really think it's altogether connected to the Iran situation. I think that the rise in gold and silver is something that would have happened, and this Iran situation exacerbated it, made it a little bit worse, but it was happening anyway. It's time that gold and silver break free and move to these higher levels because of what's happening in the financial system, and so okay, let's move on and let's take a look now at the gold price. That's the silver price, $18.29 today. It's found stability, the silver price today at this new price range of about $18.29. Gold is $15.71, and it's found stability in around that price range, $15.75, $15.60, around in there, over $15.50. We're on our way up with gold and silver. And it's because gold and silver is what is actually underpinning the entire world's financial system. Even though they've created all these hybrid financial products, where they've expanded the monetary supply through all these hybridized financial products that oftentimes have counterparty risk where more than one person owns the exact same financial product. It's the same trick they pull in the banking system, where the actual amount of money it's called a fractional reserve. It's a reserve the banks hold, which is the actual amount of money applying to your money. In places like China, they've lowered the reserve requirements. I expect that's going to spread to other countries. They're going to keep lowering. It's only like 10%. Fractional reserve banking is, no, I think a lot of banks is only 6% or 10% is all they have on reserve. They're going to lower that. In the end, they won't have nothing. In other words, they don't have any of your money. They don't have any actual real reserves in the end. In the end, that's what they'll do if they keep lowering these reserves. They only have a small reserve where it is right now, a fractional reserve. Let's take a look at cryptocurrency today. And what we're seeing here is $218 billion for the industry, Cryptocurrency starting to move up again in price, but we see a very high Bitcoin dominance at 69.2%. So it's early days in this price rise for cryptocurrency. 218 billion market cap. Bitcoin price at 83.19 today. Ethereum's 142. XRP is 21 cents. Bitcoin Cash is $240, $240.37, and Litecoin is $47.25. EOS is $2.85 today. So those are our prices for cryptocurrency. Now let's take a look at the market, the Dow Jones. Well, no, we're on crude oil, so we'll do crude oil first. Crude oil prices actually come down a little bit. I guess but it's going up now. It's going up now. It's down 36 cents on the day, which is 0.5%. 62.34. I guess that came on news that there were no casualties from the strike last night, you know? So crude oil prices has actually fallen a little bit. We're going to have to keep our eye on this Iran situation very closely and see if tensions escalate or if tensions de-escalate, because this has everything to do with these crude oil prices. I'm going to tell you what, if these tensions were to spill over and it were to move into the Strait of Hormuz and it were to flare up really big and bad, we could see crude oil prices double. Quite seriously. Let's move on to the Dow today. You know, and here we're seeing a Dow that's holding its own. You know, the Dow's got nerves of steel, doesn't it? In fact, it's up 11 points right now. It just jumped. It's up 11 points. 28,595. It's got nerves of steel. It's got better nerves than I got. Anyway, take a look here. Here is U.S. Treasuries. And we're seeing Treasury yields falling today all the way out to the 30-year, but they're not falling significantly. It's roughly a little bit, about 0.5 basis point. But now when we move in to the U.S. 1 year, the U.S. 1 year has moved 1.5 basis points. So it's moving the most of any. It's at 1.524 on the U.S. 1 year. Out to the 30-year, we're looking at only 2 basis points. The 30-year is at 2.3, and we're looking at a 10-year at 1.82 today on the bonds and treasuries. Now, where's our dollar index? Here's our dollar index today. U.S. dollar index 97.16, and we're looking at a strong dollar. The dollar's moving back up in price. Generally, that's negative for gold and silver when the dollar moves up in price. But considering the circumstances that we're in right now, I personally think traders should be flocking into gold and silver right now. Considering the circumstances in the world, just how volatile the world situation is right at this moment in time. Traders should be flocking into gold and silver, considering it's what underpins the entire world's financial system. And we're moving into these volatile times where the world could just erupt, you know? And it's on the edge, it's on the brink right now. Everything's on the brink right now. It's an oil-based economy. People are going to learn that this is an oil-based economy, and that what happens with the oil over in the Middle East can affect the entire economy and affect everybody's lives, because everything is made from oil, you know? And I know America has become a major oil producer, and I know America is exporting this oil to many different places. But if something were to break out in the Gulf and that oil were to get cut off coming through the Gulf of Oman, you know, and through the Strait of Hormuz, the net effect on the world, the shortage that could create, I know America produces enough oil to cover that shortage, but changing those supply lines around that are already in place, where the export lines and everything, so that it can be used for domestic consumption, would take an awful lot longer and an awful lot more effort than they're giving it credit for. Because I saw Kramer on there last night. He was talking like, oh, it's not a problem. America could just switch it around, bang, bang, like that, like it's nothing. Like they could just do it overnight to switch these supply chains and supply lines around and get it so that America consumes their own oil if we have a shortage. You just can't do it overnight like that. It's something that's going to take time. It would take probably at least 6 months to even get started on it. You know how government agencies and everything are, how slow they are. Even if they're being pushed, it takes them a long time to do something. So that's my point on it. Listen, thank you guys for listening to this market report. Give me a thumbs up, and we'll catch you guys in the very next show. Bye-bye.